Nvidia and Palantir are two strong stocks to keep an eye on in 2025. Both have produced big moves, beating the S&P 500. But which one is the better choice for your portfolio? Let's start with Palantir, the newer kid on the block. Since its direct listing in September 2020, Palantir did what most stocks do, which is move into a sideways market as it finds its footing. But it eventually gathered momentum and earned it a coveted spot in the Nasdaq 100 index at the end of 2024. Pretty impressive for a company that many wrote off during its early days. Let's talk numbers. Palantir has climbed over 1,700% from its 2022 low, finally breaking free from that frustrating 4-year consolidation period since its direct listing. Around 125% of that climb happened since November last year, setting record highs in the process, which is great momentum and why it was added to the tech index. Now, Palantir has crossed that uber significant $100 psychological barrier, which is huge if we're looking at potential moves towards $200 and beyond through 2025. Over 30% of that 125% uptrend since setting record highs has happened just in 2025 alone, right when all the usual doomsday prophets were predicting market crashes. Once again, they've landed themselves on the wrong side of history. Let's be real, we're at the start of an AI revolution. Calling for a 2008-style market crash right now just, well, seems rather nuts. These kind of silly predictions will leave you either underperforming or worse, broke. Keep it simple. Follow the market, which is clearly bullish for now. Speaking of size, Palantir now sports a market cap of around $250 billion, making it the world's 44th most valuable company. Impressive, but let's keep perspective and compare it to the behemoth that is Nvidia. Nvidia is playing in a whole different league, with a market cap pushing $3.5 trillion. They're in a three-way race with Apple and Microsoft to become the first company to hit that mind-blowing $4 trillion market cap. So while Palantir is doing great, it's still a minnow compared to Nvidia. Now, Nvidia's had an interesting February, climbing 23% despite challenges like the DeepSeek situation and those trade tariff changes that caused a 20% dip in late January into February. But unlike Palantir setting new record highs, Nvidia's been in this sideways market since last June. Why is that? Well, after that monster 1,300% climb between 2022's low and last year's high, the stock needed a breather. And you know what? That's completely normal. Stocks just can't go up forever. That's not how markets work. We get these boom periods where smart investors maximize their gains through holding and compounding positions, followed by quiet consolidation periods where patience ultimately becomes your best friend. But here's where experience comes in handy. When everyone's panicking and those doomsday folks are out having a field day, good investors stay calm. They understand these sideways periods often set the stage for the next big move up. And Nvidia, they've got a track record of doing exactly that. 3 major uptrends, with the last 2 hitting that 1,000% plus mark, with the most recent triggering a 10-to-1 stock split in mid-2024 after cruising past the $1,000 per share level. So what could drive both stocks higher in 2025? For Palantir, we're looking at several key catalysts. First, there's the government sector. Despite talks about defense budget cuts, the reality is that AI-driven defense capabilities are becoming more crucial than ever. Palantir's deeply embedded relationship with various government agencies gives them a serious edge here. Then there's the commercial sector, which is really where the explosive growth potential lies. More and more businesses are realizing they need AI-driven data analytics to, well, stay competitive. Palantir has been making serious inroads here, and their AI platform has been getting rave reviews from clients. We're seeing industries from healthcare to manufacturing jumping on board, and this could just be the beginning. But of course, there are challenges too. Palantir is trading at about 75 times projected 2025 sales, which, let's face it, is pretty steep. And CEO Alex Karp's plan to sell nearly 49 million shares, that's raised some eyebrows. Plus, they're facing increasing competition from tech giants like Microsoft and Google in the AI space. Speaking of competition, this is where things get really interesting. You see, while everyone's focused on the big numbers, there's a fascinating battle happening beneath the surface. Palantir's government contracts aren't just about data analysis anymore. They're increasingly about AI integration and national security. The company's recent wins in military contracts suggest they're becoming more entrenched in critical infrastructure, which could provide a solid foundation for growth, even if the commercial sector hits bumps. As for Nvidia, their story in 2025 is all about execution. Their recent earnings report was crucial. Analysts were expecting between $37.5 and $38 billion in quarterly revenue, which is very much a statement about Nvidia's dominance in the AI chip market. Their new Blackwell line of AI processors is particularly exciting. These chips represent the next evolution in AI computing power, and early indicators suggest demand is through the roof. The partnerships they're forming are impressive too. Just look at the Google Cloud integration of their GB200 NV rack systems, or South Korea's massive order for 10,000 GPUs for their national AI computing center. Okay, let's talk quickly about Nvidia's market strategy, because this is crucial for understanding their potential in 2025. They're not just selling chips anymore. They're creating entire ecosystems. Their CUDA platform has become the de facto standard for AI development, creating a moat that competitors will find really hard to cross. Even as companies like AMD and Intel try to catch up, Nvidia's lead in software and developer tools gives them a massive advantage. But of course, here's the thing about Nvidia's dominance. It comes with its own set of challenges. Regulators are starting to pay attention, and there's increasing pressure to prevent any single company from controlling too much of the AI infrastructure. The Department of Justice's antitrust investigations could throw a wrench in their plans, and we can't ignore the geopolitical risks, especially with China. Okay, now let's talk a bit about future stock price. Nvidia's consolidation phase could last longer than many expect. We've seen this before with other tech giants, but historically, these periods of consolidation have led to even stronger breakouts. Looking at Nvidia's chart patterns, there's a striking similarity to their 2022 consolidation, which preceded the massive 1,000% rally from 2023 to 2024. A move through the current all-time high will see Nvidia start targeting $200 once again. We know from its history that when it moves big. A move through the daily 200 simple moving average to the downside will see Nvidia likely target $100, which is unlikely, but remember, never impossible. A move to the upside is always greater, simply because the long-term trend and the market as a whole is very much bullish. We have been holding Nvidia since early 2023 and looking to add more positions to our portfolio. So for us, the strategy is clear. Wait for the breakout, confirm new all-time highs, and then make our move when the next uptrend starts. So for now, it's simply about applying the most underrated investor skill, which is patience. For Palantir, the technical picture is a little bit more complex. Yes, they're in an uptrend, but the stock's never been at these levels before. That means we don't have any historical reference points for support and resistance. The recent 15% pullback to test the $100 level is actually healthy. It's giving the stock a chance to build a new base to work from. But here's the key. How it behaves around this level will tell us a lot about its future potential. If the $100 support zone holds, we could see the stock eventually break out and start moving towards $200 per share. However, if the $100 level is broken, then the stock could fill the gap caused by the recent earnings report and drop to as low as $85. If you're holding Palantir shares, then you must be prepared for both eventualities and have a clear plan of action in place, whichever direction Palantir decides to go. If it moves up, then you'll want to continue holding, but also strategically add more positions, what we call compounding. If it drops further to fill the gap, then that is where exit management comes in. There are many high-performing stocks in AI and other sectors, and I've discovered a fast way to identify them. This method not only helps you find stocks quickly, but also targets ones with the potential to grow by 80% or more. Click on this video to learn how you can do it too.